Hey everyone, it's Daniel here from InfoRest. Hope you're all doing well. I wanted to do a quick video to talk about few things for this week. We have a lot of earnings that are coming out this week. We also have macro data that is also a lot of it coming out this week as well. We had one particular one that came out today. ISM manufacturing that came out today. We had the JOLTS number that came out today. So I'll talk about that in a minute or two. But this week we have a lot of macro data like ADP employment. We have non-farm payrolls number that's coming out on Friday. But most importantly, we have the Federal Reserve, the U.S. Federal Reserve coming out tomorrow, and they're expected to do a 75 basis point rate hike and at 2 o'clock tomorrow, 2 p.m. Eastern Time. And so a statement will come out. The rate hike decision will also be released. And then 2:30, you'll have the press conference, and that's where you'll get the Federal Reserve to come out and answer a couple of questions as well. Now, the markets over these past couple of days have been talking about this Fed pivot. Now, tomorrow is going to be very important because we're expecting to hear something about this Fed pivot, right? What is this Fed pivot, right? You know, a lot of this word is being thrown around, and when you talk about a Fed pivot, you probably think about that, okay, if a pivot is coming, that means what? We're raising rates to now cutting rates? But I don't think so. I don't think that's where we're going if the market is thinking in that sense. But where most likely this pivot is going to be accepted and where this pivot talk is coming from on what idea, the idea is that the Fed is expected to slow down the rate hikes rather than aggressively do these 50, 75 basis point rate hikes, right? So we're expected that in November, we're going to get 75 basis point rate hike. December, most likely will probably be a 50 basis point rate hike unless something changes, right? But either 50 or 75 in December. And then next year, we're going to slow it down with a 25 basis point rate hike. But in my opinion, this doesn't really mean that we're going to get this pivot and the Fed is going to do a bunch of easing all of a sudden just because they're slowing down the rate hikes. So they're still punching the markets with higher interest rates, but they're just doing it this time with at a slower rate, right? Instead of punching it harder with these 75 basis points, they're just doing it in slower increments, lower increments, I should say, which is the 25 basis point, but they're still punching the markets to try, or the economy, to try to bring the inflation down, right? So, you know, we're not really pivoting until we completely stop and then start talking about rate cuts, right? Because that would be the next thing down the road. So for tomorrow's meeting, it's going to be interesting to see that if we do get a 75 basis point rate hike, the press conference that comes out and the statement also, definitely you want to take a look at the statement and what they have to say there. If they don't mention anything about some sort of dovish pivot, then definitely you want to take a look at what they're going to say in the press conference. And if in the press conference they do mention some sort of dovish pivot, sure, equities and bonds may like that, and you might see a rally tomorrow. Now, if they don't, and they come out pretty hawkish, then obviously you can see a continuation of the sell-off, and equities and bonds would not like that. Now, what I think is likely to happen is there might be a middle ground where the Fed may say that yes, we are looking to slow down, or maybe, you know, there are members in the committee that have expressed that over tightening is something that they're worried about. So we might be looking forward, depending on the data, again, being data dependent, depending on inflation is, depending on the job market and so on. We will see how data is, and if it if the data is telling us that we should slow down, then we possibly may do it. So you could get, Powell give kind of a little bit of a dovish stance in the beginning about the slowdown of interest rates, but then come back right again with the idea that, hey, even though we are thinking about slowing rates, it can still change because we're still data dependent. We still have to fight inflation, and we're still tightening. We're not easing at all. So we might play that middle ground between extreme dovishness and extreme hawkishness, which some people might be thinking that may come out from the Fed. Now, of course, he could play on any spectrum. We'll find that out tomorrow. He could be extremely hawkish or dovish. We'll see. But if I were to pick a side, I think hawkish side. Continuing with the hawkish narrative would make sense until we see more evidence, more signs of inflation coming down, which is probably likely what the Fed would say in their press conference. So let's see what happens. Now, very interesting today that we got ISM manufacturing numbers that came out. So I'm looking at it here right now, and we see ISM manufacturing came out at 50.2, which is above the expected number of 50. So that basically tells you and shows you that, okay, the markets are the economy didn't go below that 50 expected number, and since they didn't do that, ISM manufacturing tends to be that leading recession indicator. We're still not really in that recession, right? So economy is still doing fine. Now, if I look at the ISM manufacturing employment, the number came in at 50, which is lower than the 53 expected, but higher than last month's number of 48.7. And new orders a little bit higher at 49.2 versus the 47.1 of last month. And then now the prices component, very interesting here, that the prices component hit 46.6 versus the 52.5. So that is telling you in the ISM report that the prices have come down quite a bit, or a little bit here, when you compare the 46.6 versus the 52.5. So that's a very good plus, that, okay, maybe that is signs or early signs that, yes, inflation or prices are starting to show some sort of weakness, and that, maybe, again, maybe, we don't know for sure, maybe inflation is peaking here, and we will probably see it come down sooner or later. Now, on top of that, we also have the JOLTS job opening number. And the last month's number got revised higher, and this number came in stronger than expected. Now, the stock market and the bond market, as soon as this number came out today at 10 a.m., completely sold off. So if you look at the S&P 500, you look at NASDAQ, you look at the 2-year, the 30-year bonds, you look at gold, you look at currencies, right? Except the dollar, everything was selling off. The dollar was moving up, and mostly when you look at this data, you would think that, why would the number come down? Why would the equity market and the bond market sell off? Because one, we have an okay reading in terms of the ISM number. We have an okay reading in terms of the headline, 50.2 versus the 50, slightly higher. And most importantly, you have prices component, which came in weaker. So shouldn't that be a buy? Now, the problem is, on one spectrum, you might have 50% of the traders thinking that this is a buy, versus the other 50% might be looking at this and saying that, okay, wow, JOLTS number, the job openings, came in way stronger than expected. So amazing to see that the numbers came in stronger. That means that, okay, the jobs report, the jobs data in US, the employment in the US is still doing well. And that is a worry for the markets and for the Fed, because we heard from the Federal Reserve that they want to go ahead and affect or kind of shrink the job market, have the unemployment rate increase, and they don't want to see the job market doing so well. And because they want to bring the inflation rate lower. So because of this, that's why we saw that the equity markets were selling off. Bonds continue to sell off because of this number. And then today, as I sit here, it's around 4:15 p.m. The markets closed negative on the equity indices, especially on Nasdaq in more particular. So tech got hit hard, just because on this narrative that the jobs number was not bad, and tomorrow we've got the Fed coming out and making the interest rate decision, and we're going to hear more from Jerome Powell at 2:30. So this is pretty interesting because it sets the tone for tomorrow that, okay, jobs is doing better, may not be a good thing. And we had also, I'm forgetting the name, but the individual from Wall Street Journal put out a post or tweet saying that this JOLTS number is something that the Fed would not want to see. So the Fed whisper is coming out and commenting on these few things, and definitely that can put in sentiment for tomorrow that, okay, if jobs is doing well, that means maybe we're not gonna hear this dovish pivot that everyone keeps talking about, right? In the markets, we keep hearing this dovish pivot, this dovish pivot, this dovish pivot, but it tends to be you tend to see cold water being thrown right on that, and we tend to see those reversals. So it'll be interesting to watch and see what happens tomorrow. I'll do my best to, after that event, to commentate and maybe do a video and explain what happened. And if you have any questions, feel free to leave your questions or comments below. And hit the subscribe button, the like button if you like this video, hit the bell icon to be notified on future videos, and I'll see you guys around. Cheers. Bye.